Now, dividend distribution tax or buyback tax, with regard to that, there is no amendment. Now, special provisions related to stock market. So, with regard to capital gain, with effect from assessment year 1819, the exemption under section 1038. Please note the section, it is 1038. In case of equity shares acquired on or after 1/10/2004 shall be available only if the purchase transaction has also suffered STT, subject to some notified exceptions for genuine cases like IPO, FPO, bonus issue or rights issue issued listed by the listed company. Acquisition of shares by a non-resident in accordance with the FTA policy of the government. So what happens? The special provisions which relate to stock market with effect from 1819. This is a new amendment. The exemption under section 1038. So the exemption with regard to 10 subsection 38 with regard to equity shares which are acquired on or after 1/10/2004 shall be available only if the purchase transaction has also suffered STT. So there are exceptions, that is IPO, FPO, bonus issue, rights issue and acquisition by non-resident. So what are the conditions? The exemption under section 1038. First point, in case of equity shares, only in case of equity shares which are acquired on or after 1/10/2004. Third point. Next, the purchase transaction should have suffered STT. And what are the exception to this? Genuine cases like IPO, FPO, bonus issue or rights issue by the listed company, acquisition of shares by non-resident in accordance with the FTA policy. So what are the points? We are once again noting it down. Applicable only for shares. Here itself we saw that the word is called equity shares. So applicable only for shares, therefore not applicable on units of mutual fund and units of BT. Now applicable only to section 10 subsection 38. And thus 15% rate under section 111A shall not be affected by this amendment. Only for 1038 this is applicable, that too for only for shares. Now, applicable only for acquisition on or after 1/10/2004. Here itself we saw it. Therefore, as there was no STT before that date, only on or after 1/10/2004. Some exceptions will be notified for which this restriction shall not be applicable. Now, what is the taxation of business trust? With regard to that, no amendment. Investment fund, no amendment. Dividend and bonus stripping, no amendment. Assessment of partnership firm, no amendment. Next, assessment of religious and charitable trusts. So that is a pretty big chapter, and in that also some amendments are being there. With effect from 1819, new amendment. The return of income of the trust has to be filed on or before the due date in order to avail exemption under section 11. So, if you want to get the exemption under section 11, you have to file the return of income. That too on or before the due date under section 139. Next condition. With effect from assessment year 1890, if a trust is registered under section 12A, adopts modification of its objects. The trust has its trustee. Now, they can modify the object clause of the trustee. Yes. When they are modifying the object clause, if it do not conform to the conditions of granting registration, it will have to apply for fresh registration within a period of 30 days from the adoption of modification. So, the trust can modify its objects, and the trust is registered under section 12A, it adopts modification of the objects. And if the modification is not in line with the conditions which are granted at the time of registration. So at the time of registration, some conditions will be granted. If the trust deed is modified and thereby the object clause is modified, and the modified object clause is not in conformity to the original conditions at the time of granting registration, then what it have to do? It will have to apply for fresh registration. What is the time period? Within a period of 30 days from the adoption of modification. So find out the date of modification. Within a period of 30 days, you have to go for fresh registration. Now, with effect from 1819, donation to other trust with a specific instruction that it shall form part of the corpus shall not be treated as application of income. So one trust is donating to another trust. So donation to other trust, and there is a specific instruction that it shall form a part of the corpus of the trust. So the amount which is being donated is forming the corpus of the trust. If that be the case, that amount which is donated shall not be treated as application of income. Next, assessment of political parties. So even with regard to assessment of political parties, there are some amendments. So we saw that with regard to religious and charitable trust, we saw that there is a compulsory filing of return on or before the due date in order to avail exemption under 11. Similarly, for political parties also, the return of income of a political party has to be submitted on or before the due date under section 139 in order to avail exemption under 13A. So the return of income of the political party has to be submitted on or before the due date. What is the date? Under section 139, the due date has been specified. On or before the due date, it has to be filed with regard to the return of the political party in order to avail exemption under 13A. Similar to that of the trust. The return of income of the trust has to be filed on or before the due date in order to avail exemption under section 11. Next, with regard to donation, any donation in excess of rupees 2,000. So this is also with the effect from 1890. Any donation in excess of rupees 2,000 shall be received by account pay check or account pay draft or electronic mode, or it is electoral bond. So this electoral bond is also a comparatively fairly new concept. So the donation in excess of 2,000 should not be received in cash. So what it should be received? It should be either through an account pay check or an account pay draft or electronic mode or electoral bond. Next, records of donors contributing in excess of 20,000. So the previous limit is with regard to donation in excess of 2,000. Now we come to record of the donors. So record of the donors, whenever it is exceeding 20,000, have to be maintained by the political party. With regard to with the effect of 1819, contribution by way of electoral bond shall be immune from the rule. So when it is electoral bond, you need not maintain the details. So normally whosoever is contributing in excess of 20,000, you have to maintain their details. The political party have to maintain the details of such donors. However, if it with effect from 1819, if the contribution is received by way of electoral bond, then it shall be immune from the rule. So the immunity is with regard to electoral bond. Next, assessment of electoral trust, no amendment. Next, minimum alternate tax MAT. The normal rate of tax is 30%. With effect from 1819, if the turnover of a domestic company does not exceed 50 crore. So normal rate is 30% for domestic company. So new amendment is, if the turnover of the domestic company not exceed 50 crore and 15.6, the rate of tax shall be 25%. However, with effect from 1718, following section 115BA was introduced in the Act, where then assessee company has an option to pay tax at 25% if the following conditions are satisfied. So normally it is 30%. However, if the turnover is not exceeding 50 crore, the rate shall be 25%. So already in 1718 there was 115 BBA which has been introduced. So assessee company has an option to pay tax at 25% provided the following conditions are satisfied. What are the conditions? First, the company is a domestic company. It should not be a foreign company. The company should be a domestic company. It has been set up and registered on or after 1st March 2017. This is a time limit. On or after 1st March 2016. Now, it is engaged in the business of manufacture or production of any article or thing and not engaged in any business. So, what does it mean? It should be either in the manufacturing business or production of an article or production of an article or anything, but not in any other business. So, only for this manufacturers and producers, this benefit is being given. In its total income, the company has not claimed any benefit of SEZ reduction under 10AA. So, SEZ gets a lot of benefits. So, this particular company, in its total income, should not have claimed any benefit of SEZ reduction under section 10AA, accelerated or additional depreciation. It should not have claimed any benefit of SEZ reduction or accelerated or additional depreciation or investment allowance or expenditure for scientific research or any income related to deduction other than 80 GJA. The option is furnished in the prescribed manner before the due date of filing of return. So you have to find out the option and it has to be given before the due date of filing return of income.